Always remember, if they don't give the date when to prepare the balance sheet, it is understood that on the date of admission of a new partner, we have to prepare the balance sheet. Revaluation account is prepared during admission and retirement of a partner, whereas realization account is prepared during dissolution of a partnership firm. If any asset is taken over, so that amount will be transferred to partner's capital account. So average inventory, what is the formula? Opening inventory plus closing inventory divided by 2. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the second session and we were discussing about model question paper of the year 2023-24 and the subject is accountancy. So already we have discussed section A, B and C in your session 1, that is under model question paper 2023 and 24, which is given from the board. So in today's session, we shall continue with section D, that is 12 marks questions. Now go through the question here. So this is from your 7th main. So your first main, that is under section A. So you'll be having 20 questions of 20 marks. Under section B, you will have 5 questions, that is of 2 marks, 5 questions out of which you have to answer only 3. Under section C, that is of 6 marks question, out of 5 questions you have to answer 3 there. Now under section D, this is a 12 marks question where 6 questions will be asked, out of which you are going to answer only 3 questions. Now go through the question, let us see what are the questions they have asked in your model question paper and let us also see what are the solutions. What are the solutions for that for your 12 marks questions. Now your 27th question, that is under Roman number 7, that is answer any 3 questions. Each question carries 12 marks. So 3 into 12, that is 36. So here itself you can get 36 marks here. Now your 27th question is A and B are partners in a firm sharing profit and loss in the ratio 3:2. Their balance sheet as on 31st/3/2023 was as follows. Now if you see this question is related to admission of a partner. So you might have seen the blueprint there. So in your admission and retirement, you will be having an option there. Either they will ask admission for 12 marks or retirement for 12 marks. So in the model question paper, they have asked a question from admission of a partner for 12 marks. So they have given the balance sheet as on 31st/3/2023. So this is your balance sheet. Now you can go through the balance sheet later now. And they have given us few adjustments. So on 1/4/2023, C is admitted into partnership on the following terms. So they have given, so A and B are partners and C is going to admit as a new partner on the following conditions. Now they have given C should bring 25,000 as capital and rupees 8,000 towards goodwill for 1/6 share in the future profit. And the second one is depreciate furniture at 10% and appreciate building by 20%. And the next one is PDD, that is provision for doubtful debts, is no longer necessary. They have given. Next D, provide 1,000 for repair charges. And E is goodwill is to be withdrawn by the old partners as per AS 26. As per accounting standard 26, we have to treat the goodwill and we have to record the entries during admission of a partner. And for 12 marks, they have asked prepare revaluation account, partner's capital account and new balance sheet as on 1/4/2023. Always remember, if they don't give the date when to prepare the balance sheet, it is understood that on the date of admission of a new partner, we have to prepare the balance sheet. Hope you are clear. So this was a question. Now if you see the question, they have given the old balance sheet here. So whatever the balance sheet they have given in the question, it is old balance sheet, that is before the admission of a new partner, and they have given certain adjustments where they have asked us to prepare revaluation account, partner's capital account and new balance sheet on the date of admission of a new partner. So don't get confused. We are going to prepare balance sheet on the date of admission of a partner, not during the end of the year. Okay, so hope you are clear with the question. Now we shall directly go through the solution where we can go through each and every adjustment in detail. Now, if you see the solution, so you will begin with the heading revaluation account. Don't get confused with the revaluation account and realization account. Revaluation account is prepared during admission and retirement of a partner, whereas realization account is prepared during dissolution of a partnership firm. So, which is the account to be prepared under admission? That is revaluation account. Under retirement also, if they ask a problem for 12 marks under retirement, so you have to prepare revaluation account and not realization account. So, what is the format of revaluation account? Particulars, amount, particulars and amount. You have debit and credit side. Don't always forget to write this DR and CR. This is which indicates debit side and credit side of the account. Now, I have given a hint there. So, while solving, if you see the admission chapter, go through the sessions. So, I have given a hint there how to easily write those entries under revaluation account. So, under debit side, you can remember A minus L plus, which means if any assets have decreased and liability have increased, you are going to record in the debit side. Under credit side, A plus L minus. So, under revaluation account, you are going to record increase or decrease in value of assets and liabilities. So, if any assets value have decreased and liability value have increased, you are going to record in the debit side. In the same way, in the credit side, if any assets value have increased and liability value have decreased, you are going to record in the credit side. Okay, so hope you are clear. Now, in order to prepare your revaluation account, you have to go through the adjustments. Okay, so go through the adjustment here. Normally, your first adjustment will be relating to the new partner, where during the admission, they'll bring capital as well as goodwill. Now, this will not be recorded under revaluation account. We are going to record under partner's capital account. So, hope you are clear about it. Now, second one is depreciate furniture at 10% and appreciate building by 20%. Now, depreciate furniture. Furniture is what? Furniture is an asset. Depreciation means what? Decrease. Decrease in asset. Where do we record? If you see your evaluation account, A minus, decrease in asset. A minus means what? Decrease in asset. So, where do we record? In the debit side. So, how to record? To furniture account. That is, what is the value of furniture? So, furniture value is, so if you see the balance sheet, your furniture value is 30,000. And what is the percentage? 10%. So, 30,000 into 10%. So, to furniture account, 30,000 into 10%, that is 3,000. Again, what they have given in the adjustment, appreciate building, correct? So, see the question here, appreciate building by 20%. Building is what? Asset. Appreciation means increase. Increase in asset. Where do we record? That is under the credit side. By building account, what is the value of building? Go through your balance sheet. So, building value is how much? 30,000. So, 30,000 into 20%. That is how much? 6,000. Hope you are clear. Appreciate building, increase in asset. So, A plus. So, you will record in the credit side by building. Your value is there in the balance sheet in the question. 30,000 percentage they have given in the adjustment. 30,000 into 20%. That is 6,000. So, hope you are clear. Next one. Provision for doubtful debts is no longer necessary. Now, see the balance sheet. So, if you see the balance sheet, PDD, how much they have given? 2,000. Even though it is there in the asset side, so you have to know that PDD is what? PDD is liability. So, we have deducted from debtors. So, PDD is liability. Now, it was 2,000, but in the adjustment, they are telling that now it is not required. So, earlier it was 2,000. Now they are telling that we are not going to record PDD. It is no longer necessary, which means that a PDD have become 0. So earlier it was 2000, now it is 0. So PDD is what actually? I have told it is a liability. So PDD is a liability. Earlier it was 2000, now it is 0, which means what? Decreased. Correct? Decrease in liability. So to what extent it has decreased? 2000 it has decreased. Correct? So, decrease in liability, where do we record? So, in your revaluation account, decrease in liability, you will record L minus. So, you will record in the credit side by provision for doubtful debts. How much? 2,000. To what extent it has decreased? 2,000 it has decreased. Now, next one, provide 1000 for repair charges. Now, if you see the balance sheet here, they have not given the repair charges anywhere. Now they are telling that provide a provision for repair charges. So what do you mean by that? So provision for repair charges means it is a liability. So in the balance sheet, it is not there. A new liability have come into the business, which means that liability have increased. So increase in liability. Where do we record in your evaluation account? That is in the debit side, L plus. So to provision for repair charges, 1000. Next, if you see any other adjustment, goodwill withdrawn, it comes under partner's capital account, not in your revaluation account. Now, what you have to do, you have to balance both the sides. How to balance? Already you know how to balance. If you see the debit side, it is 8,000. If you see the credit side, so we have only two, that is 4,000. So, which one is greater? 8,000 is greater. Write 8,000 both the side. But in the debit side, it is only 4,000. 8,000 minus 4,000 will get a balancing figure of 4,000, which has to be distributed only to the old partners. In which ratio? Old ratio. So now your credit side was more than debit side, so which means that it is profit. So how do you write? To profit transfer to partner's capital account. What was the profit? 4,000. 4,000 into, they have given the ratio in the question itself, 3:2. So you have to distribute that. So 3 by 5, you will get 2,400. Again for B, 4,000 into 2 by 5, it is 1,600. So hope you are clear with your revaluation account. Now coming to your partner's capital account. So we'll write the heading partner's capital account. The columns are particulars A, B, C. You have to draw column for new partner also. In the credit side also particulars A, B and C. Now what do you transfer first? So I have given you few steps to follow. So what do you transfer first? First we will transfer the capital of the partner as by balance carried down. So what is the capital? So capital is 40,000 and 30,000 they have given in the question. So I'll write it as by balance carried down. How much? 40,000 and 30,000. So 40,000 and 30,000. Next is you will transfer the revaluation account balance. So revaluation account balance is how much? 2,400 and 1,600. Now this is profit. So you have to transfer to the credit side in your partner's capital account. So by revaluation account profit 2,400 and 1,600. Next your third step is, so first step I have told you, you will transfer the capital. Second step you will transfer the revaluation account balance. Third step, you will check your balance sheet whether there is any reserve, fund, profit and loss account. Now let's see the question here. Yes, so we have reserve fund here. Only one we have. We don't have general reserve or any other reserve. We have only one reserve fund. No profit and loss account. So we'll transfer this reserve 4,000 in which ratio? 3:2 ratio only to the old partners. So I have transferred here by reserve fund 4,000 into 3:2 will get 2,400 and 1,600. So we are done with the old partners. Now new partner brings capital and goodwill which will be given in the first adjustment itself. That is C will bring 25,000 as capital and 8,000 towards goodwill. So how do you write now? Now if you see your balance sheet, we have cash in hand. So we have cash here. So what you will do? You will write by cash account. Suppose if it is cash at bank, then you will write by bank account. Okay, so now it is cash in hand. You will write by cash account. Now you will add capital and goodwill 25,000 plus 8,000 and write that amount in the new partners column. So by cash account 25,000 plus 8,000, 25,000 is capital, 8,000 is goodwill. So you will write 33,000 in the new partners column. Okay, so hope you are clear with this. So first you will transfer the, or you will bring down the capital. Next you will transfer the revaluation account balance. Third step, you will check your balance sheet whether there is any reserve, fund, profit and loss account. If so, you will transfer that. The fourth step is you will record the entry for capital and goodwill which is bought by the new partner. So you will write it as by cash account, add capital and goodwill and write the amount in the new partners column. Now goodwill distribution as per accounting standard 26. Now what they have given? So what is the goodwill which is bought by the new partner? 8,000. Now this 8,000 has to be distributed among the remaining partners. So for which you have to prepare a working note. See the working note here. Calculation of goodwill. C is a share of goodwill. That is whatever the goodwill which is bought by C is how much? 8,000. Now this 8,000 has to be distributed among A and B. That is the old partners in which ratio? In their profit sharing ratio. That is 3:2. Old ratio. Actually this has to be distributed under sacrifice ratio. Since in the problem they have given only old ratio, so that suppose if they have given new ratio, then we would have calculated sacrifice ratio. But only old ratio is given, so old ratio itself is considered as sacrifice ratio. So if you distribute, you will get 4,800 and 3,200. Now that's what I have written here. A share of goodwill is equal to 8,000 into 3 by 5. You'll get 4,800. And B share of goodwill is equal to 8,000 into 2 by 5. That is 3,200. So how do you write here? Always remember under admission it is new partners capital account data to old partners capital account. Now who is the new partner? By C's capital account 8,000 into 3:2. But remember while writing the amount, now it is by C's capital account. So C's column should be dashed, remaining has to be filled. A and B has to be filled here. So 4,800 and 3,200. For the same situation, the continuation of the entry is that is new partner to old partner. Now who are the old partners? To A's capital account and to B's capital account. Now A and B's column should be empty. For C you have to fill this 4,800 and 3,200. It is reverse. Okay, so you have to fill the amount like that. So this is about your goodwill distribution. Next, if you see the question, the last adjustment is goodwill is withdrawn by the old partners, for which the entry is to cash account goodwill withdrawn. Now, how much A share of goodwill? 4,800. B share of goodwill is 3,200. So, they have withdrawn here. Suppose if they have given half of the goodwill is withdrawn, then we will take half of this. That is 2,400 and 3,200 into 1 by 2, half of 3,200. So, hope you are clear with this. So, only these many adjustments you have to record under partners capital account. Now, you will balance both the side. Balancing figure will be transferred to where? That is, it has to be carried down. Now, how to balance? If you add all the amount of A, it is 49,600. But here it is only 4,800 in the debit side. So, you will get a balancing figure of 44,800 which has to be carried down. So, how to write? To balance carried down balancing figure. In the same way for B also you have to do. If you count the total of credit side, it is 36,400. In the debit side we have only 3,200. So 36,400 minus 3,200 will get a balancing figure of 33,200. So this is a balancing figure. Now if you see the C's column, it is 33,000 in the credit side. In the debit side we have 4,800 plus 3,200, that is 8,000. So 33,000 minus 8,000 you will get 25,000 as balancing figure. So this has to be carried down. So whatever the amount you have carried down here, bring down that balance and finish it off with your partner's capital account. So hope you are clear. Now moving on to the next one is balance sheet. So we have to prepare balance sheet also on 1/4/2023, that is on the date of admission of a partner. So what are the columns required for balance sheet? Liabilities, amount, assets and amount. Now in order to prepare your balance sheet, you can refer your question, that is your old balance sheet. Now go through the old balance sheet, which is the first one we have cash at bank. We shall start from the asset side. Cash at bank, we have 5,000. Now for this 5,000, you have to add capital plus goodwill which is bought. If goodwill is withdrawn, you have to minus that goodwill. Let's see how we have written here. So cash in hand 5,000 which is there in the old balance sheet plus capital which is bought by the new partner plus goodwill which is bought by the new partner. At the same time, goodwill is withdrawn. So minus 8,000. So we'll get 30,000. Next one, PDD is no longer necessary, which means that PDD have become 0 now. So 20,000 minus, so you have to write 0. So see how we have written here. So debtors 20,000, PDD is no longer necessary, means now the PDD have become 0. So minus 0, it will be 20,000. Next one, stock, that is 17,000. There was no adjustment on stock. You will write directly. So stock, you will write directly 17,000. Next is building. So for building, what you have an adjustment 30,000 building we have, but there is a appreciation. So add appreciation of 20%. Anyhow, you have calculated. So when you calculate 20%, it is 6,000. So 30,000 plus appreciation 20%, 6,000, that is 36,000. Next is furniture. We have 30,000, but we have depreciation of 10%. So how much is depreciation? 3,000. So 30,000 minus 3,000, 27,000. So hope you are clear with all the assets. Now come to the liabilities. So we are done with all the assets, still furniture. Now if you see the liability, creditors and bills payable, there is no adjustment relating to that. So we will write directly how they have given in the old balance sheet. So let's see how we have written here. So creditors 20,000, bills payable 6,000. Next we have general reserve, which has already been transferred in your partner's capital account. So if you see your partner's capital account, already we have distributed. So no need to take that one. Next what we have, capital. Capital also already we have taken. So we have taken here by balance carried down. Now which capital you will take in the new balance sheet? This capital what you have carried down, that is your balancing figure. So you have to take capital of A 44,800, B 33,200 and C 25,000. So capital you will write as it is, A 44,800, B 33,200 and C 25,000. So the overall capital is 1,03,000. Next what you have here, so if you see the adjustment, we have to record all the adjustment twice in your solution. So if you see this one, capital and goodwill which is bought by the new partner, already we have taken under partner's capital account, that is by cash account. Other time we have added in the cash in hand, that is in the balance sheet. So once we have taken under partner's capital account, once in balance sheet. Depreciate furniture and appreciation we have taken under revaluation account and once in balance sheet. Provision for doubtful debt also once we have taken under revaluation account and in balance sheet. Next, provide 1,000 for repair charges. So we have taken under revaluation account, other time we have not taken anywhere. Now what is this provision for repair charges? It is a liability. New liability have entered into the business. So you have to record in the liability side. Goodwill withdrawn we have already taken, that is in partner's capital account and in balance sheet we have deducted from cash in hand. So this provision now we have to take under liability side. So if you see the liability side here, provision for repair charges 1,000. Now if you add both the sides are equal, that is 1,30,000. So hope you are clear about a problem on admission of a partner, a 12 marks problem. Now moving on to the next problem, this is a problem on dissolution of a partnership firm. So they have given the balance sheet as on 31st/3/2023. Who are the partners? Rashmi and Geeta are partners and their profit sharing ratio is 3:2. And they have given the balance sheet here. Next, in the adjustment they have told that certain assets are realized. That is your first adjustment is relating to realization of assets. And the next one they have given furniture was taken over. A partner have taken over the asset. And the next adjustment was Rashmi paid the dissolution expenses. Here the dissolution expenses is not borne by the firm, but a partner of the firm have paid the dissolution expenses. Let us see what is the entry we have to record there. Next D, all the liabilities were discharged in full. So they have asked us to prepare realization account, partner's capital account and bank account. So this is a 12 marks problem. Now let us see the solution for this. So first we will start with your realization account where we have debit and credit side. Your format is particulars, amount, particulars and amount. Now we shall go through step by step. So your first step is you will take all the assets except cash, bank and profit and loss account. So if you see the balance sheet, old balance sheet what they have given, in the asset side we have lots of assets. So what is your first step? Take all the assets except cash, bank, profit and loss account. Let us see what are the items to be taken. Cash at bank, we will not take. Bills receivable, debtors, stock, machinery, furniture, goodwill. All these we have to take. This is your first step. First step is what? Record all the assets except cash, bank, profit and loss account. So where we have to record? We have to record in the debit side. Now let's see how we have recorded here. Yes, we have taken all the assets. To bills receivable 10,000, to debtors 20,000, to stock 15,000, to machinery 15,000, to furniture 10,000, to goodwill, that is 30,000. This is your first step. Now coming to your second step, record all the liabilities except 5 items. So what are the 5 items? Reserve, fund, profit and loss account, partner's capital and partner's loan. Except this, we have to record all the liabilities that is in your credit side. Now let's see what are the liabilities we have. Yes, we have creditors where we have to take, bills payable we have to take, partner's loan no need to take, reserve fund no need to take, capital no need to take. Only 2 liabilities we have. Let's take that liability in the credit side. So how to take? By creditors, that is 10,000, by bills payable 10,000. Hope you are clear with us. 2 steps. Now coming to your third step. Third step is related to realization of assets. So see your adjustment, they have given a lot of assets with a realized value. So how do you take for this? Whether we have to record cash account or bank account. So for which we have to see here. They have given cash at bank. Then what you have to write? By bank account. If they have given cash in hand, then by cash account. Now here they have clearly given cash at bank. So I'll write by bank account. So by bank account, this is for assets realized. So we have to record under realized value. So what are the value we have? Bills receivable 7,500, debtors and stock 10% less than the book value. So we have to minus here. So bills receivable 7,500, debtors. So debtors, if you see the balance sheet, it is how much? 20,000. So 20,000 minus what they have given, minus 10% less. So debtors 10% less than the book value. So 20,000 minus 10%. So how much it is? 18,000. In the same way, stock. So what is stock? 15,000 minus 10% because 10% less than the book value. Then what they have given? Machinery realized 5% more than the book value. So what is the value of machinery? 15,000. More means 15,000 plus what is how much? 5%. 15,000 plus 5%. So machinery 15,000 plus 5%, that is 15,750. Next what they have given? Goodwill realized at rupees 12,000. So goodwill you have to take at rupees 12,000. So these are all realized value. We will take as it is with the heading by bank account in the bracket assets realized. We will take the realized value. So how much it is total? 66,750. So hope you are clear about it. Next what the adjustment they have given? Furniture was taken over by Geeta. If any asset is taken over by the partner, you will transfer that into partner's capital account. So how do we record? By Geeta's capital account, furniture taken over at what price? 8,000. They have given in the adjustment. So hope you are clear about it. Now let us see the next adjustment. So Rashmi paid the dissolution expenses 800 for which 1,000 for completing the dissolution process. Now Rashmi have paid the dissolution expenses. So how do you record for that? So you will record to Rashmi's capital account, that is dissolution expenses. How much? 1,000. So actual dissolution charge was 800 but Rashmi had paid 1,000. So I'll write it as to Rashmi's capital account dissolution expenses paid. How much you have to take? Not 800, you have to take 1,000. Next they have given all the liabilities were discharged in full. So if you see here, so what are the liabilities we had? We had only 2 liabilities. So which means that these assets have to come to the opposite side here. Either it has to be realized or taken over by the partner. Now how many assets are there? 6 assets. So Here, if you take 5 assets, they have realized and 1 asset is taken over. So, all the 6 assets are done. Now, if you see the liability here, there are 2 liability. 2 liabilities have come to the opposite side, that is debit side, which is discharged in full or paid in full. So, how do you write? To bank account, liabilities paid, credit as 10,000, bills payable 10,000. So, overall it is 20,000. So, hope you are clear with this. So, there are certain steps to be followed under dissolution. So, only your realization account is quite lengthy. So, what are the steps to be followed? Your first step is take all the assets except cash, bank, profit and loss account. Second step, take all the liabilities except reserve, fund, profit and loss account, partners capital and partners loan. Third step, you will record the entry for assets realized. Fourth step, for asset taken over. Fifth step, liability paid. Sixth step, if any liability is taken over. And the last step is for dissolution expenses. Next, as usual, you will balance both the sides. You know how to balance, and the balancing figure will be transferred to partners capital account. So, how to balance? You will add all the item from the debit side. It is 1,21,000. In the credit side, it is less. So, deduct that amount so that you will get a balancing figure of 26,250. So, what is your balancing figure? Now, your debit side is more than credit side, it is loss. So, where do you transfer? By loss transfer to partners capital account. So, who are the partners? Rashmi and Geeta. So, 26,250 into 3 by 5, you will get 15,750 and next is 10,500. So, this is about your realization account, which is bit lengthy. Next is partners capital account, which is a short account that has to be prepared. As usual, what are the columns required? Particulars, 2 partners name, that is Rashmi and Geeta. Credit side also particulars Rashmi and Geeta. So, what do you transfer first? By balance brought down, that is your capital. So, how much capital we have? That is 30,000 and 40,000 capital. We will transfer that by balance brought down. Then transfer the realization account balance. So, how much realization account balance now in this problem? It is loss. So, 15,750 and 10,500. That loss has to be transferred to the debit side, 15,750 and 10,500. Next, you will check your realization account. If any asset is taken over, so that amount will be transferred to partners capital account, which has to be transferred here by Geeta's capital account. So, how do you write the reverse entry? To realization account, amount have to be filled in Geeta's column. So, to realization account, 8,000 in Geeta's column for furniture taken over. So, in the same way, if any other asset is taken over, you will write the reverse entry and write in partners capital account. Next, what you have? So, if you see your realization account, one more entry we have where the amount which is paid for dissolution expenses by the partner itself. So, that is to Rashmi's capital account. How do you write the reverse entry? By realization account. So, by realization account 1,000 because 1,000 is paid by Rashmi. Next, you will balance both the side. Here, balancing figure will not be carried down. Remember that balancing figure has to be transferred to bank account because the firm is going to end. We are going to settle the amount. So, it is transferred to partners capital. Not the balance has to be carried down. It has to be transferred to bank account. So, how do you write? To bank account. So, this will be the balancing figure. Hope you know how to balance. So, when you balance both the side, you will get this balancing figure which has to be transferred to bank account, not carried down. So, carried down will be done only when we are preparing the balance sheet. Now, the business is going to close, so I have to transfer to bank account. Next, we shall prepare the bank account. Once you are clear with your realization account and partners capital account, your bank account is actually very easy. Okay, so your format is particulars, amount, particulars and amount, debit and credit side. Now, you will first bring down the balance to balance brought down. What is? So, if you see the balance sheet, cash at bank, how much it is? 5,000. So, this 5,000 has to be brought down. So, to balance brought down, how much? 5,000. Next, if you see your realization account, so where there is bank account, for that you have to transfer the entry. So, here we have 2 bank account. So, how do you write the reverse entry? By realization account, how much? 20,000. This is for liabilities paid. So, how do you write? by realization account. By realization account, liability is paid. Next, where there is bank account, yes, if you see here, for assets realized, we have bank account. So how do you write the reverse entry? To realization account. That is in the debit side, to realization account. So that is for what? Assets realized. So how much? 66,750. Next one is again where we have bank account. So we don't have any other bank account. So next what you will do? Come to the partners capital account. Here we have bank account. How do you write the reverse entry? By partners capital account. That is by Rashmi's capital account, by Geeta's capital account. So by Rashmi's capital account 2250, by Geeta's capital account 25,500. Next one item is left, that is loan. So you'll write by Rashmi's loan, which is there in the balance sheet 5,000. Now you will balance both the sides. So your both the sides gets tallied. That is 71,750. Here also 71,750. So this is what? This is for assets realized. The entry is for assets realized. So it is to realization account. Okay, so hope you are clear with the bank account. Next, we shall move on to the next problem, that is on issue of shares. 29th problem. Go through the problem here. Sagar Company Limited issued 10,000 equity shares of rupees 100 each at a premium of 10 per share. The amount was payable as follows. So they have given all the stages: on application 20, on allotment 50, on first and final call 40. So all the shares were subscribed and the money duly received except on first and final call on 500 shares. The directors forfeited and reissued the shares at rupees 80 per share. Pass necessary journal entries in the books of company. Now they have clearly given, so you will 100% you will get a problem on shares where it will be issued under 3 stages: application, allotment and first and final call, where it has to be forfeited and then it gets reissued. So you have to know the exact 9 journal entry, where under application stage 2 entry, allotment stage 2 entry, first and final call 2 entries. So under application, bank account data 2, that is receiving of application money. Next is transfer of application money. Under receiving of application money, bank account data to equity share application account. So how do you write the amount here? 10,000 into 20 rupees. Number of share is 10,000. Application money is 20 rupees. 10,000 into 20, that is 2 lakh. Narration being application money received on 10,000 shares. So you can go through the solution here. Next is transfer entry. Equity share application account data to equity share capital account. You will write the same amount. Now coming to the allotment entry, due entry and receive entry. Due entry is equity share allotment account data to equity share capital account. We have premium also, 10 rupees premium to securities premium account. So what is the number of shares? 10,000. 10,000 into 50. That is for equity share allotment. To share capital, 10,000 into 40 because 10 rupees is premium. So 10,000 into 40 to securities premium 10,000 into 10. So if you see here, 10,000 into 50, 10,000 into 40, 10,000 into 10. This is allotment money due. Next, receive entry, bank account data to equity share allotment account. So receive entry is this 5 lakh because we have received including premium. So hope you are clear about 4 entries. Now coming to the 5th one. First and final call money due. Your entry is equity share first and final call account data to equity share capital account. What is the number of shares? 10,000. Call money is 40 rupees. 10,000 into 40. That is 4 lakh. That is first and final call money due. Next, receive entry. So we have not received for all the shares. So we have not received for 500 shares. So there was 10,000 shares, out of which we have not received for 500 shares, which means that we have received only for 9,500. So bank account data to equity share first and final call account 9,500 into 40 rupees. That is 3,80,000. Hope you are clear with this. Be careful here. You have to minus the amount for which we have not received. Next is forfeiture entry. Equity share first and final call account data to forfeited shares account to share first and final call account. On 500 shares, we have not received first and final call money. So how do you write the amount? How much we had to receive excluding premium? 100 rupees. 500 into 100. Out of which 40 rupees we have not received on first and final call. So 500 into 40 for first and final call. How much we have received then? Out of 100 rupees, 40 rupees we have not received. Then how much we have received? 60 rupees we have received. So 500 into 60 goes for forfeited shares account. So hope you are clear with this. Being 500 shares forfeited for not paying first and final call money. Next, 8th entry is for reissue. Now, this 500 shares of 100 each has been reissued at rupees 80, which means 20 rupees is discount. So, that discount has to be transferred to forfeited shares account. So, your entry is bank account data, forfeited shares account data, to share capital account. So, 500 into 80. We have reissued at 80 rupees. You can go through the question once again. We have reissued at rupees 80. So, forfeited shares account, 20 rupees is discount to equity share capital. 100 rupees was the actual amount of shares, actual value of share. So, 80 rupees, 20 rupees is discount and 100 rupees. So, your narration will be being 500 shares reissued at a discount of rupees 20 each. Or you can write it as being 500 shares reissued at rupees 80 each. Next, last entry is you are going to transfer that forfeited shares account data to capital reserve. So, how do you write the entry forfeited shares account data to capital reserve account? Now, in the 7th entry, what is the amount which is there in forfeited shares? 30,000. In the 8th entry, it is 10,000. So, 30,000 minus 10,000, this 20,000 will be transferred to capital reserve. So, hope you are clear with this. If you write this 9 entry, you will get 12 marks. So, learn those 9 entries properly and learn how to record the amount for each and every entry. It is very simple. Now, we shall continue with the 30th problem. So, this is a problem relating to issue and redemption of debentures. Okay, so they have given only 4 situations where you have to record 8 entries for that. So, your first, 3rd, 5th and 7th entry is same. So, which carries 1 mark. Entries are same but the amount differs. And 2, 4, 6th, 8th entry. So, this carries 2 marks each. Okay. So, 1, 3, 5, 7, the entries are same which carries 1 marks each where the amount differs. And next 2, 4, 6th and 8th entry, it carries 2 marks each. Now, for this 8 entries, it carries 12 marks. Now, you can go through the each and every situations. Now, the first situation is, that is A, issue of rupees 50,000, 8% debentures of 100 each at a discount of 10% and redeemable at par. Now, it has been issued at discount and redeemed at par. So, what is the entry? Bank account data to 8% debenture application and allotment account. So, 50,000 minus 10% because it is issued at discount. So, 45,000. And your next entry, transfer entry, 8% debenture application and allotment account data, discount on issue of debentures account to 8% debentures account. It has been issued at discount and redeemed at par. So, your transfer entry will be like this. So, 45,000, 5,000 and 50,000. For more explanation, you can go through the sessions there where I have explained each and every situation in detail. So, here I will just tell what is the answer for this particular question. Let us see the second situation. It is being issued at premium and redeemed at par. Now, let us see what is the entry. I have told you 3rd entry is same but the amount changes. So, bank account data to 8% debenture application and allotment account. Since it is issued at premium, 50,000 plus 10%, that is 55,000. That is being application money received. Transfer entry being application and allotment account data to 8% debentures account and it is issued at premium, right, to securities premium reserve account, 50,000 into 10%. So, your amount will be 55,000 here and here 50,000 and 5,000. So, this is the third situation is like it is being issued at premium and redeemed at premium. So, your entry will be bank account data to debenture application and allotment account. It is issued at premium, so 50,000 plus 10%. So, being debenture application money received. Now, since it is redeemed at premium, so we will have this entry, debenture application and allotment account data, loss on issue of debentures to 8% debentures account. since it is redeemed at premium, so to premium on redemption of debentures account, it is issued at premium to securities premium reserve account. So respectively, you have to put the amount there, debenture account, so it is 50,000. So it is issued at premium 5,000, redeemed at premium 5,000. So based on that, you will put the amount here. So you can go through the session wise also where I have clearly explained. So this is just a solution of it. Now coming to your next situation, that is your last situation. So if it is issued at discount and redeemed at premium. Now let us see what is the entry for this. Bank account data to 8% debenture application and allotment account. So it is issued at discount. So 50,000 minus 10%. Now transfer entry is, it is issued at discount, redeemed at premium. So your entry will be debenture application and allotment account data, loss on issue of debenture to 8% debentures account to premium on redemption of debentures account. So this is for being it is redeemed at premium. Okay, so based on that, you will put the respective amount there. So you can clearly go through the sessions and see how we have to easily put the amount based on the entries and situations what they have given. Now coming to the next 31st question. So this is a question based on comparative as well as common sides. So in this model question paper, so they have clearly asked us comparative position statement, which means comparative balance sheet. So they have given all these year amount of 2022 as well as 23. Now, what you have to do, comparative balance sheet of Janata Company Limited as on 31st/3/2022 and 23. What are the columns required? Particulars, 2022, 2023, increase or decrease in rupees, increase or decrease in percentage. Now, this thing you already know how you have to record or write in the order. So, it starts from equity and liabilities. Under that, first one, shareholders fund, A, share capital, B, reserves and surplus. And the second is non-current liability. Third one is current liabilities. Coming to assets, we have non-current assets. Under that, fixed asset, tangible asset if you have. In this problem, they have given building and machinery. Intangible assets, they have not given. Current assets, so total. So this is how you will write the amount. Now, since it is a comparative statement, so you will write this amount as it is in the order what they have given. However they give, you have to write in the exact order of balance sheet. Now, how to get increase or decrease in rupees? This minus this. It is 5 lakh minus 4 lakh, 1 lakh, 60,000 minus 50,000, 10,000. Till the end, you will do the same. That is amount of 2023 minus amount of 2022. You will get increase or decrease in rupees. Okay. Now, how to get increase or decrease in percentage? This 1 lakh divided by 4 lakh into 100. In the same way, 10,000 divided by 50,000 into 100. 5,000 divided by 15,000 into 100. Then you will get this percentage. Okay. So, till the end, you will do the same. So, your comparative statement can be easily solved. Just you have to be careful with the calculation and using of calculators here. Next, we shall see the 32nd question of your model question paper. So, this is a question where they have asked from your chapter, that is accounting ratios. So, this is a 12 marks problem. So, go through the problem here. The following is a summarized profit and loss account for the year ended 31st March 2023 and balance sheet as on that date. So, they have given us trading as well as profit and loss account. At the same time, they have given us balance sheet. And let's see what are the ratios they have asked us to calculate. Now, they have given us trading profit and loss account for the year ending 31st March 2023. So, we have opening stock, purchases, gross profit. So, we have all the particulars in the debit side. At the same time, all the particulars in the credit side. Next, they have given us balance sheet also, balance sheet as on 31st March 2023 with assets as well as liabilities. Now, let us see what they have asked us to calculate. So, I have told you, so first three ratios will be on activity ratio. So, first three ratio, always they will ask the question for 12 marks where first three ratios will be on activity ratio and next three ratio calculations will be on profitability ratio. So, this is on profitability ratio. Now, let us see what are the ratios or what are the ratio they asked us to calculate. So, first they have asked to calculate stock turnover ratio, next trade receivable turnover ratio, next trade payable turnover ratio, gross profit ratio, operating ratio as well as net profit ratio. Now, only this much. For this, it carries 12 marks where each and every ratio calculation carries 2 marks each, so that it will be overall 12 marks problem. Now, we shall first see what is this stock turnover ratio. Your formula is stock turnover ratio is equal to cost of revenue from operations divided by average inventory. So, stock turnover ratio is also called as inventory turnover ratio. So, as I told you, the formula is cost of revenue from operations divided by average inventory. Now, in the question, they have not given us cost of revenue from operations. So, if you see your trading profit and loss account as well as balance sheet, we doesn't know cost of revenue from operations. So, how to calculate? There is an extra formula. So, cost of revenue from operations is equal to revenue from operation minus gross profit. So, here revenue from operation means what? Sales. So, sales minus gross profit will be cost of revenue from operation, that is 2 lakh minus 50,000. Cost of revenue from operation is 1,50,000. Now, let us see whether it is same. Yes, sales minus gross profit, that is 1,50,000. Now, we have to find out the average inventory. So, as you know, the formula is opening inventory plus closing inventory divided by 2. So, where do we get this opening inventory? So, opening inventory is nothing but your opening stock. Opening stock plus closing stock divided by 2. So, we will get under trading account. Yes, so we have opening stock, that is 65,000 plus closing stock 15,000. 65,000 plus 15,000 divided by 2 will be the average inventory. So, that is 65,000 plus 15,000 divided by 2, that is 40,000. Now, we know both cost of revenue from operations and average inventory. Now, you can apply the formula stock turnover ratio or inventory turnover ratio is equal to 1,50,000 divided by 40,000. So, your answer is 3.75 times. Now, here your activity ratio is measured in terms of times. Okay, so you have to write this 3.75 times. So, the second one is trade receivable turnover ratio. Your formula is net credit revenue from operations divided by average trade receivable. Now, what is this revenue from operation? Which means that sales. But they have not given credit sales. So, your sales itself is considered as what? Net credit revenue from operation. So, this will be sales itself. Okay, so let us see how much sales they have given. So, if you see the problem, sales is how much? That is 2 lakh. So, this will be net credit revenue from operations divided by average trade receivable. So, here trade receivable directly they have not given. So, debtors plus bills receivable will be average trade receivable. So, this will be the average trade receivable. So, let us see how we have calculated. Yes. So, net credit revenue from operations, that is 2 lakh. So, already I have told you it is nothing but your sales. Then average trade receivable is equal to debtors plus bills receivable. So, it will be overall 27,500. Now, apply the formula trade receivable turnover ratio is equal to net credit revenue from operation, which means that sales divided by average trade receivable 27,500. So, your answer is 7.27 times. Now, moving on to the next one, trade payable turnover ratio. Your formula is net credit purchases divided by average trade payable. Now, net credit purchases in your trading account, they have directly given us purchases. So, that itself will be the net credit purchase. Okay, so purchases itself is net credit purchase and average trade payable. In the balance sheet, we have creditors plus bills payable. So, creditors plus bills payable will be average trade payable. Okay, so net credit purchase I have told you it is nothing but your purchases. So, let's see how much they have given. So, purchases. So, in the debit side purchases is how much? 1 lakh divided by average trade payable. So, it's your creditors plus bills payable. So, this will be the average trade payable 25,000 plus 15,000. So, let's see how we have calculated. Net credit purchase is 1 lakh, that is nothing but your purchases. Then Average trade payable is equal to creditors plus bills payable. So overall it is 40,000. Now apply the formula. Trade payable turnover ratio is equal to 1 lakh divided by 40,000. That is 2.5 times. Now moving on to the next one, that is under profitability ratio, gross profit ratio. Your formula is gross profit divided by net revenue from operations into 100. Now what is this net revenue from operations? So it is nothing but your sales. Sales will be net revenue from operations. So gross profit already they have given in the question. So gross profit 50,000 divided by 2 lakh into 100. So this will be gross profit ratio. So 50,000 divided by 2 lakh into 100, that is 25%. Moving on to the next one, operating ratio. Your formula is cost of revenue from operation plus operating expenses divided by net revenue from operations into 100. Now, so what is this cost of revenue from operations? Already we have calculated. So cost of revenue from operation is 1,50,000. So this is 1,50,000 plus operating expenses. So if you see the balance sheet, we have operating expenses, or in the trading account, operating expenses like administrative and selling expenses. So these two are considered as what? Operating expenses, 15,000 plus 12,000. So here, administrative operating expenses is equal to administrative expenses plus selling expenses, 15,000 plus 12,000, so it is 27,000. So operating ratio is equal to cost of revenue from operations 1,50,000 plus operating expenses 27,000 divided by net revenue from operation is nothing but your sales. So sales is 2 lakh into 100, so that when you calculate you will get 88.5%. Now moving on to the next one, last ratio, net profit ratio. Your formula is net profit divided by net revenue from operations into 100. Now revenue from operation is nothing but your sales, that is 2 lakh. So let's say what is the net profit. So if you see your trading account, so we get a net profit of 20,000. So 20,000 divided by 2 lakh, that is sales into 100. So 20,000 divided by 2 lakh into 100, so you'll get 10%. So this is a very easy 12 marks problem and very easy to score also. Just you have to remember the formula and apply the formula. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.